Namaste, welcome to Arthneeti, where we discuss money and money matters to help you in your investing decisions. ICICI Bank just outperformed HDFC Bank on three important matrices, and analysts say that the stock is headed for 1550 levels. This might be your golden ticket for investing before Budget 2025. In this video, we will dive deep into the recent quarter 3 results of ICICI Bank, its valuations, its comparison with its peers, and how it can become a good investment opportunity given the turbulence in the market in recent times. So, let's begin. In 1955, India's industrial dreams were just taking flight. ICICI was born from a collaboration between the World Bank, Indian government, and industry leaders in India. Their sole mission to fuel and fund India's industrial revolution. Fast forward to 1990, ICICI is not just funding factories anymore. It by itself has become a rainbow factory. When the Indian economy opened up in 1991, ICICI transformed into a financial services juggernaut. In 1994, ICICI Bank was formed, which revolutionized retail banking in the country. ICICI was just getting started. In 1999, they became the first Indian company to be listed on the New York Stock Exchange. Now, in 2002, ICICI made a big announcement by merging their wholesale and retail banking businesses. What created was a mammoth in the Indian banking industry. Fast forward to present day 2025, the bank has a huge market capitalization of 6.8 trillion rupees. It stands at 6,613 branches with 16,120 ATMs. Well, it has been a digital pioneer and has many firsts. 2010, it launched its mobile banking app. 2015, Pockets, the digital wallet, was launched. 2016, early blockchain adapter. So these are the many firsts when it comes to adoption of digital banking by ICICI Bank. The quarter 3 results are out, and boy, have they bet analyst expectations. Well, they have left them in dust. They have outperformed all the estimates. Now, when it comes to net margin, profit, the figure stands at 11,792 crores, up 15% year on year basis, whereas analysts had expected 11,332 crores. So they have bet that expectations. Net interest income, well, it stands at 20,370 crores, up 9.1% year on year basis. Gross NPA has become 1.96, which is 34 basis point lower. Now, this indicates the quality of the assets held by the bank. The retail loans have gone up 10.5% year on year basis. Banking business surges 31.9%. Contingency buffer stood at 13,100 crores, 1% of the bonus. 78.2% provision coverage, sector best safety net. Now, when it comes to net interest margin, and an important indicator of the health of the bank, the NIM for ICICI Bank stood at 4.25% for this quarter, which was slightly lower, 2 basis point lower than the previous quarter NIM, which stood at 4.27. Now, when it comes to CASA figures, ICICI Bank, the figures stood at 34.04 for quarter 3 compared to 35.34 for the previous quarter. This indicates a slight decline in the CASA ratio, and the total deposits for ICICI Bank year on year basis grew at 14.1% to stand at 15 lakh 20,309 crores as of 31st December. Average CASA ratio remained steady at 39%. Now, when we compare this with HDFC Bank, its nearest competitor in the private sector banking space, CASA ratio for HDFC Bank for quarter 3 stood at 33% versus the 34% recorded by ICICI Bank. Comparing the CASA ratios, ICICI Bank and Axis Bank maintained higher CASA ratios of 39% compared to HDFC Bank's 33-34% CASA ratio. CASA growth, when it comes to CASA growth, ICICI Bank has been the strongest and has recorded a growth of 13.1% in current accounts and 12.3% in savings accounts year on year basis. When it comes to overall deposit growth, HDFC Bank has led the way with 15.9% year on year basis, followed by ICICI Bank, which stood at 13.7, and Axis Bank stood at 9% growth. When it comes to loan growth, again, Axis and ICICI Bank have reported higher numbers compared to HDFC Bank, where Axis Bank loan growth stood at 9% and ICICI Bank loan growth stood at 13.9%, way higher, right? Compare it with HDFC loan growth, which was at a meager 3%. Comparing some other parameters when it comes to ICICI and HDFC Bank, the return on assets for quarter 3 for ICICI Bank stood at 2.36% in comparison to 1.9% of HDFC Bank. Digital innovation for ICICI Bank, 93% transactions are digital, whereas in case of HDFC Bank, 85% of the transactions are digital. When it comes to stock performance in the last 1 year, ICICI Bank stock has gained 21.67% and HDFC Bank stock has gained 14.41%. ICICI's 518 basis point NPA reduction since 2019 is way better than HDFC Bank's flat asset quality that has been recorded following its merger with HDFC. When we check out the technical factors of ICICI Bank stock, the stock is showing more strength with all key EMAs, exponential moving averages, 50, 100, and 200-day averages showing a uptrend. Now, the RSI stands from neutral to bullish at 55.66. Brokerage houses have targeted a 1550 level for ICICI Bank, with Motilal Oswal giving it that level, and KR Choksi targeting the bank at 1500 levels. What can we expect from budget 2025, and will it be a growth propeller for banks, or is there a downside that is expected from this budget? Well, as per analyst expectations, budget is set to revive agri loan growth, and this is set to benefit the banking sector. Also, there is going to be capex revival with focus on spending by the government to boost demand in the economy, and a rate cut are expected by RBI in the February cycle, which will lead to expansion of the net interest margins. So these are some of the expectations from the budget and the upcoming monetary policy committee meeting that are going to be in that are expected to be in favor of the banking sector. Some risks to monitor as far as ICICI Bank is concerned. Well, their unsecured loans portfolio stands at 14% of their total loan portfolio. Now, these unsecured loans specifically consist of personal loans accounting for nearly 9.5% and credit cards accounting for nearly 4.2%. Now, there has been a regulatory scrutiny in unsecured lendings. Now, in response, ICICI Bank has taken measures to moderate growth in personal loans, which has slowed down from 25% year on year basis to 10% year on year basis. The bank expects that their credit card growth will remain robust, while personal growth levels are anticipated to remain similar. Another notable slowdown has been a 21% drop year on year basis in the overseas loan segment. So, this is also one of the factors maybe impacted because of global slowdown, and which needs to be monitored when you are studying ICICI Bank. So, the million dollar question, is it a right time to invest in this stock? Well, as I have already noted, analysts have given a level of 1500 upwards for the stock prices. Currently, the stock is trading at 1250 levels, but past performance is never a guarantee for future returns. As shrewd investors, it is always expected that we do our own thorough research, seek advice from experts, financial advisors, as it helps to align our investing decisions with our financial goals. If you have liked this video and you think it has added value in your decision making when it comes to money matters, please like, share, and subscribe to my channel for more such informative content. Until next time, stay safe. Goodbye.